Last week, I broke down how senior facilities actually make money. We talked about revenue per resident, care levels, occupancy, and why operations drive margins. But understanding the business model is only half of the equation. Because the real question investors should ask is, how do you know if a senior living facility is actually a good investment? Today, I'm going to walk you through how professional operators like myself analyze senior living facilities before we even start investing in them. My name is Roberto Carabetta, and welcome to the SLAM Playbook YouTube channel, Senior Living and Multifamily Playbook. I'm a senior living operator and investor, and on this channel, I break down how senior living actually works from both an operational standpoint and an investment perspective. If you're interested in passive investing, commercial real estate, or senior housing specifically, this channel will help you understand the business behind the asset. The first metric most investors look at is occupancy. How many units are filled? Occupancy is important, but occupancy alone doesn't determine whether a facility is performing well. A property could have high occupancy, but still struggle financially if the revenue per resident is low or the expense structure is inefficient. Professional operators always look after beyond the occupancy. It's not just the occupancy number that they're looking at. We want to understand the quality of the revenue being generated. You can have high occupancy at a low rate. You can have low occupancy at high rates. We have to find what that reasoning is, what that balance is really actually performing. What is that sweet spot? One of the most important numbers in senior living is revenue per resident. Residents typically pay a base monthly fee, but additional services on top of that increase that number. Last week, I talked about a base assisted living fee or a base memory care fee on a monthly basis, then a care level on top of that, care level 1, 2, and 3. Look back at my previous channel to find out how I dive deeper into that. But these services can include care level, medication management, memory care programs, and assistance with daily living. Two facilities with identical occupancy can generate very different revenue depending on the level of care being provided. Understanding this number is very critical when evaluating the deal. That's my job, to analyze these 2 or 3 different metrics to have that sweet spot and find that happy number that is actually generating the real revenue, not just fake occupancy and fake up fees. On the other side of the sheet, you have expenses. The largest expense in senior living is payroll. Yeah, you got it. Payroll takes up about 40-50% of total operating expenses. You have caregivers, nurses, executive directors, kitchen staff, housekeeping. If payroll is not controlled properly, margins disappear quickly. Operational efficiency matters. And that's what I look at. I look at assets before I acquire them, look at their financial statements, and find out what's going wrong. Real financials make all the difference and tell me the full story. A strong operator like myself, we focus on proper staffing ratios, reducing overtime, minimizing agency staffing, and improving retention. Facilities with a strong culture and a strong leadership perform significantly better over time and over their competition. I'm going to give you a simple example at a high level. Imagine a senior living facility with 80 units. If occupancy is at 70%, about 56 residents, if the average revenue per resident is approximately $4,500 per month, that produces roughly $250,000 in monthly revenue. Now imagine the operator improves occupancy to 85%. That brings a total resident count to 68 residents. At the same revenue per resident, that $4,500 mark, revenue increases to roughly $310,000. So you went from $250,000 to $310,000 by increasing occupancy, that 15%. One method of analyzing a senior living deal is looking at the market. We analyze a local market. We look at population trends for the 75 plus age group. We separate that and look at population trends for the 80 plus age group, because they're two different age groups with two different needs. We analyze the number of existing senior living facilities in that area. What's our competition? What's their occupancy? What's their pricing? If you followed me on Instagram, you just saw I mystery shopped a couple of competition in the area where I'm looking to purchase a new asset. Senior living is a needs-based business, but understanding the local supply and the demand dynamics is still essential when evaluating these investments. You don't know what the other competition is doing unless you're stepping foot in the building. You have to ask the right questions. You have to be mindful that you're not blowing your cover. You're trying to pull out information from that ED or the marketing manager that's giving you the tour. You're trying to pull out the information on what is your actual rents, not your advertised rents on your website or your fancy brochures, but what rents are you pulling in? You might be advertising $5,000, but you might be giving concessions or rebates, and you might actually be getting $4,500 a month. So just because it's on the website, it doesn't matter it's real. So that's why mystery shopping means a lot. You get to see the lay of the land. You get to see what the staff is actually doing with the residents. If they're doing anything at all. What activities are they doing? How are they caring for the residents? And you get to see the leaders that are giving you that tour. What are they about? How do they run the facility? Are they giving you the right material for marketing purposes? So mystery shopping is one of the crucial points that I like to do before I even put an offer on acquiring a facility. A large piece of the puzzle is having the right operator, the experienced operator, a knowledgeable operator, and someone who knows what they're doing in that specific market. One of the biggest mistakes passive investors make is focusing on the property itself. Senior living is business operated first, not asset, not property. In senior living, the operator makes the difference over the actual building. The building is just the four walls. It's just the block that the business is housed in. Leadership, staffing, culture, compliance, operational discipline. These are what separates strong facilities from the struggling ones. You have to have an identity. You have to build a culture. You have to lead with example, with experience, so your staff follows that path, follows your vision while you're building a vision for themselves. You have to let staff grow. A care level staff might want to become an ED, an executive director one day. You have to give them the tools, resources, and information to get there. You don't want your staff just suppressed and stayed at the same position. A lot of staff members want to grow, and a lot of staff members like where they are. But you as an operator, as a leader, as an owner, have to determine and pull out of your staff who wants to grow, who wants to exceed. An executive director can grow to a regional director or a regional marketing manager. There's different pathways, different avenues for staff to grow and excel. So knowing that as an operator can make a whole difference for your staff retention. They want to come and work with you. They see that path that you're creating for them. They see that path that you're creating for the whole business, for the whole culture. So your retention decreases. Many investors focus only on the demographic story. Yeah, the aging population is growing. We all know that. I've talked about it a million times. I get it. Sure, it's a box that we check when we do our research. But demographics alone do not guarantee the returns. Poor operations, poor staffing culture, weak leadership, that can create struggling facilities. That can pull the whole investment downward. Another mistake investors make is ignoring the payroll efficiency. If payroll is too high relative to the revenue, profitability disappears. Senior living success depends on operational excellence. The 80 plus population is growing rapidly. Families need solutions. Quality senior living facilities will always be in demand. But when you combine strong demographics with strong operators, you create a real durable, strong business. And a strong business builds strong wealth. Senior living is powerful, but it's not simple. If you understand how revenue works and how operations drive margins, you can properly evaluate this asset class. If you want me to break down a real senior living facility and show you the actual underwriting, step by step, comment SLF below. Like the video, subscribe to my channel, spread the word, comment what you want to hear about next week. This is the Slam Playbook channel, and I'm your host, Roberto Carabetta. Slam Playbook, Senior Living and Multifamily Playbook. See you next week.